go. Now, for those of you new here, haven't been here before, this screen right here is live on YouTube. To make it easy, because I don't know if you can see these numbers. Look how small those numbers are. If you're on a phone or a tablet, I don't know if you can read those numbers, really. But this screen is live on YouTube. Okay, the10minutetrader.com, live on YouTube at the moment. All right, so all that being said, how can you defend this strategy versus the performance of the Mag 7 and growth outlooks for Meta and Amazon? Well, let me think. Meta hasn't had 20 years of dividends. Amazon doesn't pay dividends. I am in Canada and in Forex trading. I don't do Forex, sorry. But uncharted territory, okay? You're talking about growth stocks, okay? I'm not. I'm talking about income stocks. Huge difference. Your chart is backwards. No, it's not. Okay? You read from left to right. It's just showing up on the screen backwards. If you go over to YouTube, this screen is live on YouTube. It is right over there. Okay? It's the cameras that make it look like it's backwards. Okay. Can we look at switching Walgreens to CVS? Terry, we just looked at Walgreens last night, and the numbers don't look as good as CVS. Sound isn't working on YouTube. Thanks. Really? Now, there are two YouTube channels. I don't know which YouTube channel you're looking at. Hello, my friends. Hello. It sounds like it's going good. There you go, a little bit louder. There we go. A little bit louder. All right. Is that better? Because remember, the microphones for the cameras are here, and the microphone for YouTube is over there. So it all depends on which way I'm facing at the moment. I'm still getting this room set up. And normally, okay, for those guys that are new here, normally I'm broadcasting from the Boston area. It's sitting on my nice comfy couch with the big screen behind me. No, here I'm at my son's house down in Florida, trying to get this broadcast room ready for him so that he can stop doing his own broadcast. He's going to do it a little bit different style than I'm doing it. Sure, but performance past 10 years and the future 10-year performance outlook of growth versus income. All right, uncharted territory. Dude, seriously, you know what? You're looking at, did Cisco work out? We didn't trade it. No. Okay, but uncharted territory. You're thinking of growth stocks. Okay, there's a huge difference between growth stocks and income stocks. I'm only looking at income stocks. I'm 60 years old. Okay, I have no desire to put money into an account and wait for it to go up. No desire of that whatsoever. I want a consistent income every single week. Safe, predictable, consistent 1% per week. You cannot do that with a growth stock, especially growth stocks that don't pay dividends. Okay? Just open both screens. Uh-oh. Do you trade options? Yes, I do. All right, hold on. What is this here? L. If sound not working on YouTube channel, try other YouTube channel with the same thing. Okay, that works. Shows up both screens. I don't know how to open up both screens. How is GE? Well, let's take a look. We're going to write GE down. Okay. Now, Alpha Romeo. Okay, people, give me ideas. So I will write GE down. And it's at the bottom of the list. So I don't have to wait till we get there. What kind of strategy do you use for option trading? Okay, Dustbuster, give me 1 second. Couldn't you invest everything into growth stocks and sell some shares when you need money? Roscoe, you should know better than that question. But you could, but there's no predictability to growth stocks. Okay? There's no predictability or consistency to growth stocks. Hey, why not? He's here. How much do you earn a week ballpark? 1% or more. It averages around 1%. Okay, what stocks do you recommend? I don't recommend anything. I recommend you doing your own choices. You know, look for what stocks work for you. How about the blank percent on advice? I have no idea what that means. Okay. Do you apply calculus into your trading strategy? Yeah, not at all. Super beastie. I have no idea what beastie means. So, like, if they drop 50% and you needed money now, okay, I love it. Worse than me. All right, so I don't tell anybody what to do, really. I don't. I just show what I do. I get a safe, predictable, consistent 1% per week. Growth stocks, there's no predictability, no consistency. And if it doesn't have, spill the beans, or something like that, great, how much you feel, how much you feed the broker. Oh, my broker fee's not that bad. I'm addicted type, I'm addiction type, so I understand. Okay. How do you find the most predictable dividends? Oh, that's easy. Nopes. Nopes 100. You ready? Dividend Kings. They have increased their dividend payments to their shareholders for 5 decades or more. Okay, that's 50 consecutive years, higher and higher and higher dividends every single year. The Dividend Aristocrats, 25 years of increased dividends. The Dividend Champions, 25 years of increased dividends. The Dividend Contenders, 10 years to 24 years of increased dividends. Okay, those four lists right there is over 300 good quality stocks that continuously increase their dividends. Now, I take a look at those stocks. That's where most of my stocks come from. The Dividend Kings, Dividend Aristocrats, Dividend Champions, and Dividend Contenders. Okay? 20 years or more of increased dividends. Worst case scenario, if the stock goes down, because that's all stocks do. They go up and then they go back down again. That's it. Okay? If and when the stock goes down, at least I can feel secure that I'm knowing I'm getting a higher dividend every single year. And most dividends that I invest in, most dividend stocks I invest in, pay every 90 days. That's every quarter. Every 90 days I get a dividend check. Now, if I have 10 or 15 dividend stocks, I'm getting a dividend check every 10, 15 days. That makes sense? Do you think the Wolf of Wall Street movie was anything close to reality? Well, actually, believe it or not, it was based on a true story. Because he was, that guy in the Wolf of Wall Street was in the secondary market, and the commissions were 60%. Okay, that's like a penny stocks and pink slips. Okay, you can buy, but a majority of what you're buying goes towards commissions to the salesperson. That's where he made all his money. I'm short on NIO and Hood for the next week. Long on me. All right, Dustbuster, cool. How long have you been trading for? Mike, over 20 years. Nope, thank you, you're welcome. Can you talk about the dividend on VC properties and how we would make money on the dividend? VC? Roscoe looks like growth is in very good. Okay, well, take a look at VC for a second. VICI. All right. First and foremost, VC, right here, take a look at this. This is what you call monthly options. 17 May 24, 21 June, 20 September, 20 December, January. This is monthly options. Why don't I like monthly options? Well, there's only 12 months in a year, which means potentially I can get a check once a month using options. I buy a stock, I sell a covered call against it using monthly options, I get 12 checks per year. Why would I do that? The numbers just don't work. Okay? See, right now it's at 29, the 30 is going for 5 cents. That number's preposterous. So let's go the next one out. The next one out is June. Okay, the 30 is going for 40 cents. Yeah, that's over 1%. But look, I got to hold it for 41 days. Okay, that's 5 weeks. Wait a minute, that's 6 weeks. 6 weeks, and I'm only getting a little bit over 1%. Why would I do that? When weekly options give me 1% per week, that's 50% a year. Even if I got 1% a month from monthlies, that's only 12% for the year. I don't like monthly option stocks. They just don't pay. Sorry. But if you want to do it, I'm not going to dissuade you. If you like VC and you want to do VC, hey, more power to you. I just don't like it. All right. let's get back to where we were. So I actually like CVS. I'm actually write CVS down. CVS. Because I like the numbers and I like the chart. Did you see the chart in CVS? Let's go back to the chart again. Alright. Alright, take a look at CVS. Okay, a year ago, we're over here. Come up, here's your high, here's your low down here. Now, a lot of people will say, wait a minute, this low is horrible. Why? Well, do I really care? Of course I do. But why do I care? CVS hasn't been 54 in over a year. 54 is CVS. Okay, it made its 30-day bottom, had the last 2 days were to the upside. Okay, you can only have one 30-day bottom, you can only have one 30-day top. Your 30-day top is way over here. Your 30-day bottom is right here. Okay, it made the 30-day bottom and it has 3 or 4 days to the upside. Where is this going to go? If it was going to go lower, it would have. It's made its turn, it's turning, and it's starting to go up. That's the way I see it. You know, you guys have to do your own research. Doesn't look like that to you. Okay? See the high here? Big drop, gap down. Okay, why the gap down? I have no idea. Don't really care. But you have the three major pharmaceutical companies where people buy all their drugs: CVS, Walgreens, and Walmart. Three big. There's a CVS in almost every major city. There's a Walgreens in over every major city. There's a Walmart in over every major city. Okay? So why wouldn't I? 2 days to the upside, and she's paying over 1%. Why not? That's it. That's the question. Why not? Why wouldn't I? Okay, it's on my list. I'm gonna look at it first thing Monday morning when it make sure the numbers work okay. Let's look at some more of these questions here. Nick, capital means everything on your percentage of return. Low capital, low return. Nick, I'm gonna disagree with you. Okay, so let's say hypothetically I had 10,000 bucks and I make 1% on 10,000 bucks. 1%, 10,000 bucks is 1%. And if I get 1% per week on 10,000 bucks, that's 5,000 for the year, which is 50% return. Now let's say I have a million. Okay, fine. Let's say I make 1% per week. That's $500,000 a year. Okay, fine. $500,000 a year, $1,000,000 is still 50%. 1% per week is 1% per week. Okay, for the whole year, that's a 50% return. So whether you have 10,000, 20,000, 50,000, 100,000, no matter what you got, 50% return per year is 50% return per year. Okay, whether it's 100,000, 300,000, 500,000, a million, 10,000, 5,000, whatever it is, 50% return is a 50% return. So I have to disagree with you on your capital question there. King Co, what stock would you suggest for people new to buying stocks? Anybody new, I always suggest chill, relax, just watch. Okay, learn something, then ask questions. Can you talk about dividends? All right, we already did that one. Okay. What's the, all right, Kimco, I don't make any suggestions whatsoever. Okay, I just show you what I do. Okay, if you want to copy me, hey, that's your prerogative. We're all adults here. Okay, I'm assuming, okay, I would like to think you guys all take personal responsibility for your own actions. Do your own research. I'm looking at CVS. I'm reading the numbers. That's all I'm doing. Reading the numbers. I'm reading the chart, giving you my interpretation of the chart. Is that right? Is that accurate? Is that concrete? No, it's just my interpretation. I'm having an issue with that Instagram phone over there. So let's see if I can get another one up and running. Clear. Okay. Instagram. No, it's not letting me up. Now, it looks like we're not going to do Instagram tonight. Having issues with Instagram. Okay, so more questions. Is it possible to earn a decent earning with an amount of 100 grand? Best broker, I would pick Schwab. Okay, this here is Thinkorswim.
I like this trading platform. I've been using it for over 15 years. Okay, Schwab, I tried theirs. I don't really like it. Not enough perks. I like the seasonality chart. I like the trigger trades. I like the calendars. Everything's simple, easy to get to. And boss, is it possible to earn a decent earning with an amount of 100 grand? Okay, so what is 50% of 100 grand? That's 50,000. That's $1,000 a week. Can you live off of $1,000 a week? There's your question. There's your answer. Thanks for always been my thought. Can we look at Eli Lilly? All right, we'll take a look at Eli Lilly. Hold on. Do you like Realty Income? No, I do not. They are another monthly. We'll take a look at it. Okay, I'll show you why I don't like it. But Eli Lilly. Now, I believe I told you once before, I don't do stocks of $250 because as much money as you think I have, I don't. I can't afford 1,000 shares at $750 a share. Sorry, can't do it. So I like to keep it 250 or below. Eli Lilly is $760. The 760 is going for 835, which is over 1%. Okay, fine. But take a look at this. Okay, here's the high of the year, right here, in the beginning of March. And where is it now? Well, 3 days to the downside, 613. Okay, but it's way too high for my blood. Do I like Realty Income? Let's take a quick look at Realty Income because people ask me about this every week. Okay, here's Realty Income. Okay, now the strategy that I use is very simple. I buy a good quality dividend stocks that increases its dividends for 20 years or more. Realty Income, I'm not 100% sure they are that. Okay, let's take a quick gander. For that, we go over to Yahoo Finance, put in Realty Income. All right, now it's going to pop up. Hold on a second. Okay, Yahoo Finance. Now, the screen might be bright here on the cameras, but it's not that bright when you go to YouTube, and because it's live on YouTube. You can watch it on your computer. But I'm going to tell you what the Realty Income dividend consistency is. Nice. Okay, so Realty Income has increased it, has paid dividends for 30 years. Okay, great. But there's no consistency with the increases. What do I mean? Okay, well, 94, it was 7 cents. 95, 8 cents. 97, 8 cents. 98, 8 cents. Okay, 99. Well, half of 99 was 8 cents, then it jumped up to 9. Then it was 9 cents for 4 years. Then they jumped up to 10 cents in 03, 11 cents in 05, 14 cents in 08. So 4 years, from 08 to 12, they didn't increase the dividends at all. Okay, then they went from 2012, 15 cents, then to 18. Now it's been 18 cents from 2013 to 15 in 2 years. 19 cents, then to 20, then 21, 22, 23, 2020. Okay, 25, 26. Okay. Okay, so they don't increase every single year. They increase every few years. All right, fine. But here's the issue I have with it. It's a monthly optional stock. What does that mean? Well, it's at $55 now. So if I buy it at $50, I can sell it to someone else for 45 cents a share, which is less than 1%.
Okay, but that one expires in 6 days.
It expires this Friday coming up.
The one after that, okay,
the one after that, in June, it expires in 41 days. 41 days. So 41 days is 7 weeks.
and I'm only getting
$1.10, which is 2%. You take 2% and you divide it by 7 weeks. That's not 1% per week. So why would I do that? If I had a choice, I would never, ever, ever do a monthly because it just doesn't pay.
okay, you're getting 2%, but
you got to hold for 41 days. And then I have to guess.
Okay, right now,
we got a 30-day bottom right here, right, on the 16th.
a 30-day high here on the 5th.
On 4th. Okay? And we're right here right now. Okay, fine. Not bad. I don't mind buying it here if I was going to buy it. But if I'm buying it, selling someone the right to buy it from me, now I have to guess where is it going to be in 41 days. Okay, I can figure much. I can good guess where it's going to be in 5 days. Because Monday, Tuesday, Wednesday, Thursday, Friday. That's a weekly option. Monday, Tuesday, Wednesday, Thursday, Friday. Easier to find out where it's going in 5 days rather than 41 days. Tesla, I don't do Tesla, they don't pay dividends. Sorry. I missed a lot of these questions. We'll take a look at Apple in a second. What is the risk and how can it be avoided? There is no way possible on earth to avoid risk. Okay? You wake up, you go to bed at night, you risk not waking up in the morning. You get out of bed, you risk anything that's outside your door. If you stay in bed, you risk whatever can happen to you at home. There's risk relevant everywhere, no matter where you go. Some things are less risky than others. But I'm assuming you're talking about risk of loss. Okay, well,
As you can see,
stocks go up, stocks go down, stocks go up, stocks go down, stocks go up, stocks come down. That's all they do. Okay? Now what I do is I look for when does it come down. Okay? I look for 2 days to the upside after coming off of a 30-day high. Here's your 30-day high here. I wait for it to come down a little bit lower before I jump in. This one. Look where the 30-day high is. Look where the 30-day low is. That's a lot of space in between. This right here is potential profit taking. So when you get up to here, people say, wait a second, I want to take my profits. So they start selling off, it drops down, and then it gets to a bottom. I say, wait a second, this is too cheap for this company. And they start buying. Okay, so we, the buyers and sellers, we decide what is too high and we decide what is too low. Where is it? Right there. Kind of hard to see backwards. Okay, but I don't do monthlies. They just don't pay. I missed a bunch of questions. Let's go. What did I miss? CBS has one issue. One is 13 million short. They control market price with that amount. Let's wait a week. Okay, why not? It sounds like a great idea. Okay.
let's jump up to CBS again.
All right. Now, why not? I don't tell people what to do, really. I don't. Here's the 1-year chart right here. Here's the high of the year. Okay. If it was going to go higher, it would have gone higher. Okay, here's the bottom of the year. Why is it there? Why? Well, something happened here and it dropped like a rock. Usually when you see a drop like that, it has something to do with either news or missing earnings. Okay, so let's say it missed earnings. Big deal. It made its 30-day bottom. Okay, at the point it makes a 30-day bottom, that's when you contemplate, all right, it's CBS, they're in over every major city. The bottom is there, it's starting to move to the upside. Okay, That's the only thing that's my only concern. Do they consistently increase dividends? That's number one. Number two, it's a major company that's been in business for a very, very long time. Number three, they're bouncing off of a 30-day top, of a 30-day bottom, and it's 2 days to the upside. That's my cue to get in. Okay? I would buy it at the 55.82. Okay? I would sell the 56s, and I'd get more than 1%. Let's find out exactly what that is. Bring out my calculator, clear that. That's 65 cents, and we divide it by the purchase price, 55.82. That comes to a grand total of 1.16. But you know what's really nice about that 1.16? If the stock goes over 56, which by looking at the chart, it probably very well could. Okay? They drop, going sideways a little bit, 2 days to the upside. 56 is like, what is it, 18 cents away? Okay? If it goes above 56, I collect an additional 18 cents. Okay, great. I'm collecting the premium, which is 1.12%. And if she goes above 56 by Friday, I'm collecting another 18 cents, which would bring my income probably closer to 1.75%. Okay, fine. I work with that. Mike, what advice would you give to first-year trader? I'm 18 years old. Well, congratulations there, Mike. Everyone's going to jump at some point in time. I remember I first jumped in when I was in my 30s. So you're beating me, brother. My advice, come back every night, learn what you can. When you're ready to do real trades, paper trade. It doesn't cost anything to paper trade. You can go to Thinkorswim, download it onto your computer, and open up what's called a paper trading account. And just think what you want to do. Okay, the 5 rules I have, okay, never buy something you don't want to own for a long period of time. In other words, if you don't understand it, you don't know what it is, what they do, don't buy it. Okay, never buy something you don't understand and you don't want to hold for long term. CVS has been in business for close to 100 years. Okay, they do pharmaceuticals and other products. Okay, they've been around. They've increased consistently. They're in every major city in the United States. Okay, they have stood the test of time. All right, them for me is a no-brainer. The only thing I'm concerned about is, am I getting my 1%? Well, here, yes, I am. What does the chart look like? Well, the 30-day high was there, the 30-day bottom is there. I'm only guessing for the next 5 days. Right now, it's at 55.82. If I buy it at 55.82, I'm perfectly okay with buying it at 55.82 at CVS. Why not? If she hits 56, I make my 1.12% plus an additional 18. If she doesn't, I just take it as the next week and write the same premium again next week. Okay, it's a continuous thing. It's a revolving door, a merry-go-round, whatever you want to call it. But it's the same good quality stocks, quarter after quarter after quarter, same ones. But I actually like CVS over Walgreens. Walgreens did the exact same thing. Dropped, went sideways, now she's on the upside, but it's not paying over 1%. But that's my advice, Mike. Come back every night and keep learning. Keep asking questions. If there's something you don't understand, ask the question. Ooh, Matthew 24, written up 2,000 years ago. Ask and you shall receive. You got a question? Ask. You'll receive an answer. Vance Retail. Ooh, look at this. He popped out. Nike, nice company. Pfizer, another nice company. Walgreens, another nice company. Starbucks, another nice company. Okay, I actually have Walgreens at this moment. I have Starbucks at this moment. I don't have Nike and Pfizer at this moment. But Vance, it's a nice, what do you call it? Nice little watch you get there. All right, Jazz, you want to take a look at Apple? Let's take a gander at Apple. Apple, first thing I want to look at, very first thing, 182.50. The 182.50, $1.97. That is over 1%. I like Apple. Apple does nothing but go up every year. Okay, but But, right? But she goes up, she comes down. She goes up, she comes down. She goes up, she comes down. The idea is to buy it at the right time. Okay, look for the patterns. What are the patterns here? It goes up, it goes down. Look for how many days it takes to go up. Okay, up, down, up, down, up, down. It takes more time to go up than it does to come down. That's the 1 year chart. Okay. Now I want to take a look at the 90. I like to look at the 1 year, the 90, the 30, and then the seasonality. And there's reasons for that. Okay, a year ago, we were at 174. The high of the year, 199. 90 days. 90 days ago, same thing, 90 days ago. First thing I want to look at. Where's the high? Way over here. Yeah, I don't know if you guys can see that. Slide over the needle bit. Oh, yeah, there you go. Okay, high over there, 90 days ago. The bottom, a couple of weeks ago. Okay, up, down, up. Look at the big gap up. Pull back a little bit, now she's going back up again. What does this stock usually go in? Let's look at the 30-day first. Okay, 90 days ago, we're at a high of 189.99. Okay, a couple of weeks ago, on the 19th of April, okay, the 19th of April was the 90-day bottom. Okay, and that was 164.08. The last 30 days, we go back to right there. Okay, take a look at the last 30 days. Okay, she went up, 6 days to the downside, 6 days to the upside, 2 days to the downside, 2 days to the upside, and now we're here going a little bit to the sideways, just stuck in a little bit of a channel right there. Now, I don't mind it right here, however, I don't like it. The 30-day high is here, and here's where we are now, 183.05. Okay, let's take a look at the seasonality. What does the stock normally do every year? Well, that's the same thing year after year. Okay, for those who don't know, the blue line represents the movement for this year. The red line represents 10-year average movement. Okay, January 1st to December 31st. Right now, we're in the middle of May. Okay, but normally, Apple from January 1st to December 31st, right to the upside. What about interactive brokers? I tried interactive brokers, a little complicated, but I'm sure if I sat there and played with them long enough, it would probably, be halfway decent. What website? This is Thinkorswim. You can actually go online and download this to your computer. I like the downloadable version that's on my computer opposed to the online version. The online version, I used it once or twice. I don't like it at all. It doesn't have the same perks. Right. Thanks for that, Wynaughty. MDGL will be double soon. Well, let's take a gander at MDGL. MDGL. Okay, Wynaughty, if you think that, I don't ever tell people what they should do. Really, I don't. It's a monthly. I don't do monthlies. It just doesn't pay. Okay, right now the stock's at 205. The 200 is going for $6. The 210 is going for 185. Okay, 185 is not 1%. Okay, the 210 is going for, the 200 is going for 690. But if I'm buying it at that's horrible. Yeah, those numbers are horrible. Okay, and do they pay dividends? I don't know. I've never heard of them. But let's take a quick gander. MDGL. MDGL. Okay, Sorry, dude, no dividends. Okay, I don't even look at companies with no dividends. Okay, it's just not worth my time and effort. Okay, why? Well, let's take a gander. Look where it was a year ago. Okay, you see where it was a year ago? $300, and then she just dropped and dropped and dropped, and then October, end of October, beginning of November, it was down to 120. So she goes from 300 to 120. Now, let's say hypothetically, I bought it at 300, okay, and then it dropped down to 120. What am I collecting? I'm not collecting anything because they don't pay dividends. Can I do options against it? Yeah, I can. But the options are absolutely horrible. Okay, not even close to 1%. And I can only do it 12 times a year. Okay, so no, I don't do monthly options. And I definitely don't do stocks that don't pay a dividend. All right, sorry, why not? It's a big fat no. I think Realty Income is a dividend zombie. Well, don't get me wrong. Realty Income, otherwise known as O, they pay monthly. Okay, it's not that bad if you think about it. But here's the thing: they only pay monthly, so you get a dividend every month. Now, that's a possibility. You collect a dividend, and you can collect a premium. So maybe you can get like 24, 25, 30% off of it if you do a covered call and collect a dividend at the same time. But I think the dividend is 24 cents a share for O. Okay, so you buy the stock, you collect the premium once a month, and you collect the dividend once a month. Okay, I don't know about ETFs, what kind of rules they have, and when do they pay the dividends? The beginning of the month, is the end of the month? What are the rules of an ETF as opposed to a stock? I don't know. I don't know the answer. I don't look at it because it only does monthly, and 12 checks a month, 12 checks a year does not thrill me. Hey, Mrs. 18-Wheeler, you're back again. Okay, I remember you were here before. Hey, James, it's typical. It's typical. It's Tyreek. Oh, Tyreka. Yeah, I called you last night. Now, I tell people, okay, if you really want to have a conversation with me, send me your phone number, I'll give you a call. So, Tyreka, Mrs. 18-Wheeler, she sent me her phone number last night. So, me and my son watched a movie, and I said, she just sent this to me. Let me give her a call. Give her a call last night. It's like, holy cow, I didn't believe you called me. Yeah, if you want to talk to me, you have a conversation, you have questions, send me a number. I'll give you a call. Same feed view in YouTube as here. That's correct. Where am I? Llama Pacho. Learning. Okay, there you go. Should we hold on to Apple? Jazz, I really can't tell you what to do because I don't know who you are. I don't know what your goals are. I don't know what your risk tolerances are. I'm just reading the numbers. That's all I'm doing. I read the numbers. I give you my interpretation. Okay, whether or not I will do it. I let you guys know what my rules are. 20 years of increased dividends, weekly options. I buy a good quality stock. I sell a covered call against it if and only if it will give me a 1% return per week. Okay, that's my investing strategy. I came up with it for my daughter back in 2008. It had to be simple. It had to be safe, predictable, consistent, and no way that my daughter could lose when she was 9. Right? Now, I came up with 5 rules for her. You guys can do whatever you want. This is the 5 rules for my daughter. Never buy something you do not understand or you do not want to hold long term. Okay? This one here would be a definite no. It's not simple. I've never heard of it. So if I've never heard it, I can pretty much guarantee she's never heard of it. Never buy something you don't want to hold or you don't understand. 2, never sell at a loss. 3, monthly dividends. No, sorry. Hold on. Consistently increasing dividends for 20 years or more. 4, weekly options. Because I want to check every freaking week. That's what. I want to check every week. Only way to do it. And then the numbers got to work. What do I mean by that? The numbers got to work. If I'm buying it for this, okay, you have the last trade, the bid, the ask, the volume, the open, the high, and the low. Those numbers are available on any trading platform at all. These numbers here, these are this is what is called the option chain. Option, puts and calls, allows you to buy something for a lot less, buy insurance, sell insurance. They're really interesting tool. They became available in the 1970s as an insurance policy for potential losses. Okay, so people figured out, okay, how can we use this to make money? Well, covered call is the simplest and easiest. You buy the stock, you sell somebody the right to buy it from you. If I'm buying it at 260, I'm going to sell the option at 260. So I'm going to sell it for the exact same price I paid for it. Why would I do that? Well, because of the option premium they pay me is 1%. So, most of the time. Those are the only ones I do. I won't do it if it's under 1%. It just doesn't make sense to me. I want to stay predictable, consistent 1% per week. That's what I want. Whatever you guys do, that's totally up to you. Alright. PayPal. What am I missing? What am I missing here? Thanks, Tony Hawk. Yeah. Tony Stock. There you go. Can we look at ABR? What stock do you have circled so far for this week? Roscoe, you know I let you know on the Monday morning calls, okay? I don't really give it out that freely. I'm not that nice of a person. MBG got FDA approval for a drug no one can achieve. Okay, I get it. I understand it. Great, fine, dandy. However, it doesn't fit my trading parameters. Okay, if you think that's going to work for you, that sounds like a growth stock. Okay, but it's growing the wrong way. A year ago it was at 300, and this year, a year ago it was at 300. All right, last June it was at 300. Okay, by October it's down to 120. How could you possibly tell me that's a good deal? Okay, yeah, she retraced a little bit. Now she's at 205. But still, it's a 50% loss from the high of last year. So someone bought it at 300 last year. Okay, they still haven't earned their money back. They're still 50%. Wait a minute. There's still quite a ways to go for them just to break even. Alibaba. Ooh. I haven't had somebody suggest Alibaba for quite a while. Here's the thing. Alibaba does not have 20 years of dividend increases. It doesn't. But I do own some Alibaba in a different trading strategy. So we'll take a look at it. Just for that one reason. Because I do personally own it somewhere else. My live will end in 1 minute. Oh no! They want me to prove that I'm still human, which is kind of weird. Okay. The romantic gentleman. If the stock sells off, what will the dividend do? That's an interesting question. Thoughts on Tesla, Jack Sorvey? Is that right? All right, Jack. I don't do Tesla. They don't pay dividends. Okay, that's another growth stock. All right, so you want to do Tesla? Fine, dandy. It goes up, it goes down, it goes up, it goes down. What do you get while it's going up and going down? You get absolutely nothing. Okay, I like dividend stocks because if it goes down, at least I'm getting a higher and higher dividend every year. Okay, so what happens if the stock goes soft? Now, if I buy it on Monday, okay, let's say I'm going to pick up one that I actually buy. Because I can go over I feel a little bit more comfortable going over ones that actually make sense. Okay, that one doesn't. Okay, Macy's. Here's your question. Okay, romantic gentleman, you ready? If I buy it Monday morning at $19.50, I can sell somebody the rights to buy it from me at $19.50. Okay, I can get 44 cents. That's 2.25%. We looked at the numbers last night. 2.25% for the week. So if the stock goes up, let's say it goes up to 25 bucks, whoever bought that option from me, okay, whoever bought it from me has the right to do whatever they want with that stock. Do I care that it went up? No, I don't. My main focus is collecting that premium and that premium to be over 1%. That's it. If it goes up, hey, good for that person who bought it. Good for them. They bought it. See, if I'm selling it, I'm selling for 44 cents. If somebody is buying it, they're paying 47 cents. That's a 3-cent difference. That's called the spread. That goes to the market maker. He's the one who does the buying and selling. If he offers it, if it's up here and posted, he's required to fill it. That's his job. If he posts this for sale sign, okay, if he posts these numbers, he's required to fill it. That's part of being a market maker. So I'm collecting the 44 cents a share. That's all I care about. That's it. If the stock goes up and gets called away, fine. I'm back into cash. And Monday, I do the same thing over again. The following Monday, of course. All right, let's go back to the more questions. How's Nvidia? Dude, Nvidia, I looked at Nvidia once, okay? It was at $900 a share. The dividend, 2 cents a share. Ask the question. Does it make sense to buy a stock for $900 a share to collect 2 cents per share? Okay, I meant you can't see just the screen on YouTube. All right, Blueberry, if you go back to YouTube, let me quickly show you. All right, this here is the 10-minute trader, my website, okay? If you go up to the link in the bio, okay, you go up to the link in the bio, okay, and it'll take you to the10minutetrader.com. Halfway down the page, you'll see my social media links. YouTube, Twitter, Facebook, Instagram, podcast, LinkedIn. I've been doing a podcast for over 4 years. It's like 800, 900 different episodes. Every single one of my trades, every single day, posted on the podcast. Patreon, TikTok, books by James, YouTube, right here, YouTube, see that? So let's click on YouTube. Okay, that's going to bring you to the 10-minute trader. See, the 10-minute trader. Now you have your choice. Home, video, shorts, live, playlist, community, blah, blah, blah. Let's go to live. Okay, there's 2. Here's one, there's the other. Okay, there's 6 people watching this one, 3 people watching that one. Okay, one of them is just going to be me and what you're seeing on the camera. The other one is going to be just the screen, just this computer screen. Okay, it's going to be just the computer screen, which is what we're doing right now. See that? Hello, hello, hello. Okay, there's 6 people watching this one, 3 people watching that. Okay, one of them, that's what we're doing right now. That's live right now. It's just going to be me and what you're seeing on the camera. The other one is going to be just the screen. All right. Yeah, there's 2 screens on YouTube, 2 live on YouTube. What if the stock sells off? All right, we're answering that one. Next question, next question. Wow, 1% per week. Nice. Thanks, Else. Was that Alyssa? Thank you. PayPal. Really? You want to take a look at PayPal? Wow, I'm seeing all these questions. Ribbons, no. They don't have 20 years of increased dividends, dude. Weekly options, how do I get started? Oh, you get started by going to my website, the10minutetrader.com. Halfway down the page, where was it? Okay. Halfway down the page, right there, live trading. Now I go live every morning, Monday, Tuesday, Wednesday, Thursday, 9 a.m. And I'm usually down on 10:30. You actually watch all my trades, and after I'm done, you can ask me any questions you want until you guys are done asking questions. Friday, we jump on at 3 o'clock. Okay, why 3 o'clock? Well, because we buy it on Monday morning. Okay, we buy on Monday morning. Options expire Friday afternoon. Okay, you want to make sure to take a look. Now we look every morning. Okay, we jump in first thing in the morning, take a look at all the positions that we're going to take in consideration. Does it look good? Does it make sense? This is what I got to get through to you. Does it make sense to invest in a company such as Macy's? Okay, it's over 100 years old. Okay, they've been in business for over 100 years. They've increased their dividends for more than 50 consecutive years. That's 5 decades. Consistently higher dividends every year. Not every once in a while. Every single year. Higher and higher dividends. Now, if I buy it on Monday morning, I sell someone rights to buy it from me, I can collect 2.25% for the week. Does that make sense? Now, that's Monday morning. Tuesday morning, we'll open it up, we'll take a look. Okay, what did it do today? Okay, great. Wednesday, do the exact same thing. Okay, we want to keep, or I want to keep an idea of what it's doing. Okay, then when Friday comes, okay, I bought it at 1950. Now it's at whatever it's at. Well, what are my options? What can I do? Okay, how do I set it up for next week? Okay, if you want to get started, that's how you do it. Selling options, my bud. What do I think I should invest in Monday? Well, Monday comes, that's what we'll figure out then. Very good idea. Very good deal. Yep, it is. How do I join Monday morning call? Oh, I just told you that. You come up here to the bio, right? Okay, my bio, and then you say, okay, there's a link there, the10minutetrader.com. Or, you know what? Send me your number, I'll give you a call, I'll walk you through the whole thing. Alright. PLNTX. Really, Chuck? Let's take a look at it. PLNTX. Alright, do you see what it says there, Chuck? We can't find this symbol. PLNTX. PLNTX. Yeah, dude, I typed it in right. They shorted and purchased. I have no idea what that means. Okay, who's asking about Ribbon? Ryan Star Inc. Okay, Ribbon doesn't have 20 years of increased dividends, dude. Sorry. NEM, Gallant, you gotta throw that one. Actually, I think I wrote that down and it's circled. NEM. NEM, save me, NEM. 42.49, 42.50s. Ooh, check that out. 71 cents a share. Nice, that's over 1%. So let's take a look at it. Alright, so I can buy it at 42.51. I can sell the 42.50s at 71 cents a share. Let's see what that equals. Take out my calculator. 71 cents divided by the purchase price, 42.51, and that comes a grand total of 1.67%. That's way over 1% for the week. All right, let's take a look at the chart, see what the charts say. All right, first thing I want to look at, okay, Newmont, where's the high of the year? Okay, that was a year ago. Where's the low of the year? Well, it was in the end of February. Okay, there you go. The high's way over there, the low is right over here. And here's where we are now, 42.49. All right, so let's read the numbers. The high of the year last year, 47.65. The bottom of the year, 29.50. The last 30 days, the last 90 days, okay? 90 days. I like to go 1 year, 90 days, 30 days, seasonality. The high, okay, a couple of weeks ago. The low, back at the end of February, okay? High, low, where was it? Where is it? That's what I want to see. Where's the high? Where's the low? Where was it? Where is it now? Okay. What were those numbers? 90 days ago, 33.44. The bottom was 29.42. The top, okay, 3 weeks ago at 43.91. All right, last 30 days. Okay, this gives you a lot of information. All right, where's the high? Reinvestment broker. Could you please explain how you deal with the stock that goes against you? Well, yep, basically that's exactly what you just said. Okay. Okay, I don't like YouTube because YouTube, the question just pops up and slowly fades into oblivion, and I don't always get to read the whole thing. All right, the high, right here. That was what, the 26th? Okay, the high, the low, where was it? Where is it? Okay, 30 days ago. 30 days ago, we opened up at 38.70. The bottomed out on the 23rd, and that was 36.60. Couple of days later, with a 30-day high at 43.91. Okay, so here's your 30-day bottom. Okay, couple of days later, 30-day top, comes down, finds a new bottom here, shoots on up right there. Okay, this is going to be a no for me. Why? Your 30-day top's there. Okay, you have a bottom here, and here's your other top. Well, where's it going to go down? Well, it's going to go down because you get all this profit taken here. It hasn't come yet, but it's potential profit taking. So I'd have to pass on that one. Sorry, Glenn. Zim, we're checking a look at Zim. No, Zim's a no. But I'll pull it up to you so that way I can tell you know in front of everyone. Here's where Zim is right now. Okay? The high of the year, 18 bucks. You want to buy it at the high. Explain to me how that makes sense. Okay? Now, I don't like gambling, but if you're here, if you're at a 30-day high, 90-day high, and a year high, you're standing on a ladder waiting for someone to bring you a taller ladder. Has it ever been there before? No, it's never been there before. You're going into new territory. Could it? Yes, it could. Will it? I don't know. I don't want to put my money on it. But if that's what you want to do, hey, more power to you. 759. All right, so here's a little bit of advice. Just a little tip. All right, just in time. This is just a little tip. You ready for this? The last trade, 1759. Okay, last trade on Friday afternoon, $17.59. The bid, if I owned it, I can sell it. The bid, the ask is what I can buy it for. Now listen closely. Last trade, 1759. The bid, 1746. The ask, 1758. Both the bid and the ask are lower than the last price. That is a little clue that the market maker is going to drop it on Monday. Just a little clue. Is it guaranteed? No. But for the most part, most of the time, when the bid and the ask are both higher than the last price, the market might be pushing it up. If both the bid and the ask are lower, he's pushing it down. Right here, he's pushing it down on Monday. So why would I do it? Number one, it's already at high of the year. Okay, high of the 30-day period. Okay, you think it's going to go higher? Yeah, it might, but that's not a gamble I want to take. Okay? Okay, when I had rules for my daughter, never buy at a high, never buy at a low. Okay, you can only have one 30-day high. Here it is. Okay, you can only have one 30-day low. There it is way over there. There it is way over there. Okay, it's bouncing off the 30-day low. Now it's at the 30-day high. Well, where's it going to go now? Well, more than likely, if you or anyone bought it down here and it's here, well, I don't think I want to take my profits. That would be my take on it. Yeah, it could continue to go up, but I only do dividend stocks for weekly cash flow. I don't care about capital appreciation. Really, I don't. Because you never know when this is going to happen. Hey, buddy, you want to say hi again? Man. Oh, there we go. Oh. Okay, say hi to Just in Time. Hi to Hey, what else we got? What else we got here? Hoppy Toppy. Say hi, Hoppy Toppy. Hi, Hoppy Toppy. Oh, Justine says hi, Justine. Who else do we got here? Kayaki? Okay. And then, oh, Chuck's here. Say hi to Chuck. Hoppy Toppy? He doesn't ever speak about that. Alright, what are we talking about, Hoppy Toppy? Oh, you lose money. Yeah, you do.
How do you look like my mom right now?
How could she look like your mom?
Cause
Okay.
he's
Go get. Oh, there you go. You go that way. Come on, buddy. It's bedtime. All right. Good night, buddy. Thanks, Dev. All right. So where were we? Hoppy Top. You want to talk about losses? Well, we can talk about losses. Zim all ready to fly. Divvy on the way. Okay. I'm not going to disagree with you. I mean, it could, but it's not something I would do. Now, I never tell people what to do. Really, I don't. I take a look at the numbers. I take a look at the charts, and then I say, hey, that looks good to me. This does not look good to me. Hobby Top, you're talking about hell no, Chuck, all right? He doesn't ever speak about that. What is it I'm not speaking about? Hello, Search Rollins. Envy, idea. Envy. Idea is so overpriced. Pink sheets once again. Yeah, no, I don't do pink sheets. Things he doesn't talk about that. I have no idea what you're talking about. What is it I'm not talking about? I'm on it now. Okay. Are we talking about shorting stocks? No, we're not talking about shorting stocks. What does your general strategy for trading look like? Muni guy. Hey, how you doing? You new here? Missed all these questions. Damn, I hate missing out on questions. Learn a strategy and suggest stocks that meet the criteria. Thanks, Al. Yen is the best 4 years and your money back in dividends. Craig, I've never heard of Yen. Yen coal. Okay, well. Yen, really? Y-A-N. Okay, see, when you give me a stock to look at and I put it up here and I get this, yeah, it's a definite no. Sorry. Level 2 is important. Okay, good evening, everyone. Hey, Fascinating Football Videos here. Legit, blah, 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 blah. I'm CBS all the way. Will be fun. Okay. Yep, how you doing? Next. Hi, alrighty, Hi, CBS. We already went over CBS. Ryan, next boss. Okay, blessings. He's so cute. Thanks. Hi-yo. Hey. Pierre left. James Tucker. Kids are sharp. Okay, now, believe it or not, that's my grandson. Okay? Now, I'm creating this new business for my grandson. You see, he's only 4 years old. So I got quite a ways to go before I can hand it over to him. Hopefully when he's 15, 16, maybe he'll be smart enough. Pepsi. All right, Coca-Cola is a definite no. Don't get me wrong. Coca-Cola. All right. 63.30. That's what I can buy it for. The 63, 50 cents. I'm losing 30 cents right off the top. 20 cents yet. Don't work. The 64, 7 cents. No. I've never, ever, ever bought Coca-Cola because the premiums are absolutely horrible. Always have been. ABR, Andrew, let's take a look at ABR. All right, 1322, 1350s. Yeah, no. Ivy, how are you selling? All righty. Okay, so I could buy it at 1322 come Monday morning. Okay, if I sell the 1350s, which is the next strike price out, is paying 5 cents. The one in them is paying 25 cents, but I'm losing 22 right off the top, so I'm only bringing in 3. No, those are horrible. BTBT. Okay, BTBT. Really? $2.15. Do you think this company's been paying dividends for 20 years at $2.15? Really? Kevin?
$2.15 on the 250 is 5 cents up. That ain't gonna work. 215. Okay, yeah, that works. You lost 15 cents against. Wow, that's a nice return. However, let's take a look at Yahoo Finance, BTBT, and see how many years of dividends they've actually paid out. Oh, look at this.
No dividends. Why would you suggest me to take a look at a company that you know doesn't have dividends? MGNX.
Okay, MGNX. MGNX.
Again, why naughty? Really? Come on. No dividends. Why would I look? This is a dividend investing channel. It has no dividends. Okay, AbbVie, that's a good one, Chuck. Bristol Myers Squibb, that's another good one. Yeah, I get that.
AVGO is a no. I know they're way overpriced.
Okay, so really, guys, if you're going to suggest something, make sure it has options. Here's got a news flash: 380,000. What do you call them? Votes were missing. Verizon, CIM,
And Verizon, CIM.
Sorry, dude, CIM's a monthly. I don't do monthlies. They just don't pay.
Seriously, they just don't pay. $4.50. The 4's going for 55. I'm making 5 cents off of the 5's going for absolutely nothing. Why would I bother? Okay, and then a couple weeks out, yeah, still nothing.
Sorry, the numbers just don't work on monthly optional stocks. VOO, yeah, no. And VTI, no. Okay, let's take a look at VOO for a second, because people like VOO, STHD, what was the other one? Ribbons, no, they don't have 20 years of increased dividends. Sorry. All right, Lord Yinzer, is that right? Lord Yinzer? Okay.
VOO. Okay,
Number one,
VOO is a monthly. Okay, you can't get your money out of it.
two, $478 a share. Yeah, I don't do anything over 250, but here's something better. You ready for this one? You're not gonna like it when you see it. Okay, here's VOO, okay, on the Yahoo Finance. See the numbers? VOO on Yahoo Finance. It is $478 a share. Look at the yield that you are getting, 1.39% for the year. Seriously? Savings accounts give you better than that. Okay, government bonds gives you a better return than that. 1.39% yield? Come on, seriously? Okay, so not only that, let's take a look over here. Holdings. What is actually in VOO that makes it so wonderful, so great? So we're going to come here and hit holdings. Oh, look what we have. Microsoft, Apple, Nvidia, Amazon, Meta, Google, Berkshire Hathaway, Google, Eli Lilly, AVGO. Why not just buy these stocks directly yourself? Because I know Microsoft gives a better yield than 1.3. Okay, Apple gives a better yield than 1.3. Okay, I'm showing you a trading strategy. Safe, predictable, consistent, 1% per week. You want to put your money in VOO and get 1.3%? This qualifies for WTF. What are you thinking? Okay? I'm going to create a video every week. I'm going to do WTF, what are you thinking? VOO pays 1.3% per year. It's a $470 per share. I think it's $478. $478 per share. You're getting 1.3. What the hell? Just go
straight to Apple yourself. Let's do an Apple one right now, real quick. AAPL. Okay, Apple, 182.52. The 182.50 is 197. All right, let's get my calculator out. Clear. 197. That's my profit, and it's costing me 182 per share. I divide it by 182.52 per share. It comes to a grand total of
1.07% for the week. Okay, you're going to go into VOO, which is going to give you 1.37 for the year. Here's Apple. For 1 week, it will give you 1.07.
Well, let's go look at Microsoft. MSFD. 414. 415s are going for 375. Yeah, not quite what I want, but okay. 3.75. I'm going to divide that by 414. And that comes to a grand total of
0.9%. Okay, you get 0.9% per week from Microsoft. Multiply that times 52 weeks in the year. Comes to a grand total of 47%. You are giving your money to someone else, to a freaking machine. Okay, ETF, electronically traded fund. It's a machine that trades for you. And it's giving you 1.3% for the year. Okay, Microsoft would give you 1%. Apple would give you 1.07 for a week. You do that every single week. Even if you get a 0.5% or 0.25%, you're still beating that stupid machine. Why would you give up accountability of your own money to a machine? Okay, do it yourself. What else did they have? All right. I don't like Nvidia because their dividends are 2 cents a share. You know, it's like a I think it's like a $900 stock, $900 stock, and it gives you a 2-cent dividend. Yeah, hell no. Amazon doesn't pay dividends. No. Meta just started dividends. No. Google, no. Berkshire Hathaway, no. Google, no. Eli Lilly, yes. ABGO, yes. And they have a bunch more in VOO. Okay, so why would you give your money to a computer to trade for you, and it only gives you 1.39% for the year? Come on, really? Okay, Lord Yinza, sorry. Chuck, you look like Christian Bale, kind of. Thank you. URA. Rivian is no, they don't have 20 years of increased dividends. Sorry. The trading strategy is very simple. Very simple. It was created for a 9-year-old. Excuse me. It was created for my 9-year-old girl back in 2008. It had to be simple. It had to be safe, predictable, consistent, and no way that she could lose. So the 5 rules, this is the 5 criteria. The 5 rules that came up for her was, never buy something you don't understand, you don't want to hold long term, because you just might have to. 2, never sell at a loss. 3, 20 years or more of increased dividends. Okay? 20 years or more of increased dividends. There's over 300 companies that fit that category. 20 years or more of increased dividends. 4, weekly options. I want a check every single week. Okay, I don't do monthlies. Okay, monthlies only pay once per month. That doesn't work for me. I want weekly, 1% per week. Safe, predictable, consistent, 1% per week. Okay, well, let's look at something else. URA.
URA.
Okay. 31.50. 31.50. Check it out. 45 cents. That's over 1%. Okay? So remember the rules. Never buy something you don't want to hold long term. Never sell at a loss. 20 years of increased dividends, weekly option, and then make sure the numbers work. That little tiny, make sure the numbers work. Well, here's the numbers. I can buy it at 31.50. I can sell it at 31.50. That's a covered call. It allows someone to buy it from me for the exact same price. Imagine that. I buy it on Monday, and I sell it for the exact same price I paid for it. And that person is going to give me the premium, which is, at this point, 45 cents, which is over 1%.
What is it exactly? Well, let's find out. Pick up my calculator, clear this. The 45 cents, I divide that by the purchase price, 31.50, and that comes to a grand total of 1.42%. 1.42. You're doing VOO, paying 1.3. This company right here will give you 1.42 for 1 week, and you already beat VOO. VOO, 1.3% per week. This company right here is 1.4. Okay, it doesn't take a genius to figure out 1.4 is better than 1.3, especially when you're tying up all your money for the whole year to get that 1.3. Yeah, no thanks. All right, back to this. Now, just because the numbers work, okay, I want to check the charts to make sure it's the right time to buy it. First thing I want to look at is the 1 year chart. Okay, here's the high, here's the low, here's where it was, and here's where it is. First thing I want to see, where's the high, where's the low, where was it, where is it? Now I want to go to the 90-day chart. The last 90 days. Okay, 90 days ago. Where's the high? Where's the low? Where was it? Where is it? All right, 30-day chart. Okay, last 30 days. You can only have one 30-day high. You can only have one 30-day low. Okay, your 30-day low should come down here, drops, shoots on up, here's your 30-day high, down to the downside. Yeah, it's going to come down a little bit further. My opinion. That's not guaranteed. That's just my opinion. So for me, that's a no. Because we're still near the high. I'm not jumping in hoping it'll go higher. No. I want it to come down. I want to buy it bouncing off. Bouncing off of the bottom. I don't want to buy that high. Sorry. VT, I've never heard of it. I missed them. Starbuckies. Let's take a look at Starbuckies. Love the new setup. Hey, thanks, champ. Haven't seen you the past couple of days. Can you take a look at Altria? Whoa, Altria, really? For those of you guys who don't know, Altria, MO, is a dividend king. Been in business for over 100 years. Take a look at the numbers. 44.90, close to 120 to be 45. Yeah, 22 cents. Yeah, sorry. No. Okay, Altria. MO, Altria. Right now, I can buy it at 44.86 Monday morning. Okay, the closest strike price is going to be the 45. The 45 is going for 22 cents. That's a 0.5%. Don't get me wrong. 0.5% drag it out for the whole year, that's 25% per year. If you had 0.5% every week. But no, I like 1% per week. Okay? Alrighty. Champ, I'm down at my son's house down in Florida. Got a few things to take care of. These my mom's estate and whatnot, and visit the kids. So this is not a permanent thing. Okay, this is just temporary. Then I go back up to Massachusetts. I'll be back into my own little setting where I get to sit down and my computer's right behind me. I'm getting to appreciate it because my knees and my feet are killing me from standing along this fine. Simple Man. This platform here, this is Thinkorswim. Okay, this is available through Charles Schwab. Okay, I like the downloadable version when you download it onto your laptop. Here's my laptop right here. I download it onto my laptop because I like it better than the online version. S-Box, let's take a look at Starbucks. Didn't VOO go up 20% in the last year? I honestly don't know. I don't invest for yearly returns. Okay. Amabates. Okay. I don't invest for yearly. I invest weekly. That's it. Safe, predictable, consistent, 1% per week. If you want to do yearly, hey, be my guest. Okay, I'm retired. I don't want to have to count on a stock going up in order to make my bills. I want a consistent, predictable, safe return on a weekly basis. It's been working for me for the past 15 years. And the only reason you're seeing this now is because somebody was stupid enough to get me a camera and say, hey, have at it.
Okay, so I actually enjoy this kind of stuff. I actually enjoy people who like talking about stocks and making money. But it could have been. NVIDIA, no. Sorry, NVIDIA. Audio, never heard of audio, Rick. What do you think about MO for dividends? Okay, I don't invest for dividends. I invest for dividend income. Okay, I use dividends as a precursor to tell me when to buy.
Let me just show you something really quick. All right, come over here to my market watch. Get rid of this thingy right there. Go right there and right here we go. There you go.
All right, this is the calendar. All right, every one of the stocks I look at, there's about 300 of them. That's it. Okay, we looked this past week. How many stocks are available on the stock market? 9,516. We looked the other day. 9,516. Out of all of those, only about 300 make my list. That's it, 300. 20 years or more of increased dividends and weekly options. Just those two criteria takes it from 9,500 down to 300. Okay? Every single one is into my calendar. It tells me when is it paying a dividend. Okay, so key bank right here on the 24th. If it's paying on the 24th, I want to buy it 2 weeks before.
Okay, that would be the 29th of April.
Okay?
Make by 1%.
I'm out by Friday. Great. I won't look at that stock again for another 90 days.
And I'll go to the next week. Oh, what's next week? Oh, Baxter, eBay.
Corning. Okay?
Now, all of them aren't listed because we're still in the month of May. That's a better list. All right, Corning, eBay, NEM, Bank of America, Baxter, General Motors, Pepsi.
Waste management. Ooh, I like waste management. Nice premiums. Microsoft gives 1% a week. I'll sell everything and farm that. I have covered calls for dividends. All right, Nick, I didn't say that. Okay, Microsoft is paying less than 1%. I think it was 0.9 this week. What do you think about MO? Yeah, I already answered that one. Have you ever beat S&P 500 every single year? Julie, nice of you to chime in. Nice to see you, Miss Julie. Do you ever average costs down when premiums at your buy price are very low? Julie, let's talk about that right now because
You'll see in 1 second. All right, let's go over here. All right, let's get out of that. Let's go over to here and let's put in
we're looking at Starbucks. Yay. Now, we all know there's a Starbucks in every major city. Okay, there's 4 of them here in Sarasota alone. Okay? Okay. First thing I want to look at, right?
what can I buy it for?
7606.
The 76s are going for 81 cents.
That's over 1%. Okay? Over 1%. Next thing I want to look at is the chart. Where's the high? Where's the low? Where was it a year ago? Where is it now? Now, to answer your question, let's go through the motions. Now, I like the numbers. Now I gotta look at the chart, make sure the chart's okay.
That's the 1 year. The 90-day chart, right about there. Right about there. Okay.
The last 90 days. 90 days ago was a 90-day high.
Last Wednesday? No, last Tuesday.
Tuesday was a 90-day bottom. But it gets better.
Hold on a second. Now I want to take a look at the 30-day.
All right. Now remember, I told you I liked 30-day top, 30-day bottom, and then bouncing off a 30-day bottom. Okay, now I bought Starbucks here because the previous bottom was here, and then the previous top gave me a signal to jump in. I think it was right here. Okay, at 88. So I bought it at 88, and what happens? A week later, it dropped to the floor. Okay. Now, why did it drop? I don't know. Don't really care. I think it's something to do with earnings. I think they had positive earnings and it dropped. But anyway, besides the point. I'm in it at 88, okay? And then she drops down to here. All right, what the hell did I do? Do I panic? No, I don't panic. Why? Well, because of Starbucks. Okay? We Americans are idiots. We'll pay $6 for a cup of coffee. We will. You go by a Starbucks, big long freaking line, people wanting their coffee. Anyway, the 30-day bottom was Tuesday. 2 days to the upside, right here, Wednesday, Thursday. I jumped in on Friday because I wanted a dollar cost average down. So I was at 88, I dollar cost average down, so now I'm somewhere around 86, 87, 86 and a half, somewhere in that area. Okay, now I can get a better premium. So I hope that answered your question. AFM. 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 No options, that's a no. Sorry, who suggested AFM? Me? What am I looking at? Yeah. Say the rules again? Alright, the rules again, very simple. I gotta go over the criteria first. Oh, we got 200 people here. Let me just run down some of the important information. Okay, just some disclaimers. Number one disclaimer, I'm not an investor advisor. I'm not an advisor. I'm not an accountant. I'm not an anything. I'm absolutely nothing. I'm a senior, James Vadio, senior. That's about the only thing after my name. That's it. Okay? I'm just reading the numbers where I see. That's all. Okay? I just read the numbers and give you my opinion. Now, I created this trading strategy for my 9-year-old daughter a long time ago. However, just want to let you know, there are 22 people, last time I counted, 22 imposters pretending to be me. Okay? I don't know why. I ain't that great, but there's 22 imposters out there. So if you get a text, a DM, or anything like that, asking you to send them money, yeah, don't do it. I don't ask you to send me money. I don't. I don't do cryptocurrency. I don't do Forex. I don't do any of that weird stuff. I don't do gold. I don't do silver. I do dividend stocks only. Okay? The trading strategy came about when my 9-year-old daughter wanted to know what I was doing and she wanted to do the same thing. Daddy, can you teach me? Sure, why not? So I had an issue. How do I teach a 9-year-old how to trade? Well, simple. It had to be safe. It had to be simple. It had to be consistent, predictable, and no way that she could lose. So that's the criteria I had to overcome. So, number one, never buy something you don't understand and you don't want to hold long term. Number two, never sell at a loss. Defeats the purpose of doing it in the first place. Number three, make sure the company has 20 years or more of increased dividends. Because as you can see, stocks go up, stocks go down, stocks go up, stocks go down, stocks go up, stocks go down, stocks go up. That's all they do. They do not come to your house and wash your dishes. They do not, make your bed, put little cans on your pillow. They don't do anything but go up and go down. That's all they do. That's it. They don't do anything else. Okay? Where was I? Don't get old. Getting old sucks. I forget that. You know, OPS. You know what OPS means? Old people shit. Old people syndrome. Then why something you don't want to hold? Never sell a loss. Oh, 20 years or more interest shit. Yeah. When the stock is, it's not if, it's when. When the stocks go down, I am reassured that I'm getting a higher and higher dividend every single year. Okay? All right. Number four, weekly options. Why weekly options? Well, because I want weekly cash flow. Okay? I have bills that come due every week. So I want my cash flow weekly. I look for a safe, secure, predictable 1% per week. Now that's over a 50% return per year. If you're not okay with that, this ain't the place for you. If you're looking to buy something and have it go through the roof overnight, this ain't the place for you. This is slow, methodical, boring, 1% per week. That's it. Where was I going? I was going somewhere with that conversation. I forget. Oh, yeah. So anyway, you want to talk to me, you want to call, send me a number. I will give you a call. And we'll chat. See if this is right for you. Because I have a trading group that meets every morning. Monday, Tuesday, Wednesday, Thursday. 9 a.m. to 10:30, whenever you have questions. When you're done asking questions, that's when we sign off. That's it. I'll stay on as long as you want until you're done asking questions. Okay, I'm at that point in my life where I feel compelled to share what I know. I'm just sharing what I know. I'm not giving advice. I cannot tell you what to do. I could, but I'm not going to. I'm not going to tell you what to do. I'm just not, so don't even ask. Okay, I will show you stuff. I will give you my opinion. I will explain it in the manner that makes sense. Because that's all stocks do. They go up, they go down, they go up, they go down. That's it. Me personally, I like to buy when the stock is bouncing off of a 30-day bottom. Because there's only one 30-day top and only one 30-day bottom. The 30-day top, you get your profit taken. It gets a certain point. Me, you, the investors, we decide what's too high and what's too low. Okay, why didn't this stock go to 20 bucks? Because we don't think it's worth 20 bucks. Okay, it went up to 18.50. All right, because that's all we thought it was worth. What, AT&T at 20 bucks? Oh hell no, I'm not gonna buy it. Then it gets down to here. What, AT&T at 12 bucks? Oh hell yeah, I'm gonna buy some of that. We make up those decisions. We, the buyers and sellers, we decide which directions these stocks go. Because if we continue to buy, it will continue to go up. That's what we do. And at some point, we're going to say AT&T, 20 bucks. Oh hell no! I'm going to take my profits and run for the hills, go to the next stock. Cause that's what we do. All right. So at this moment in time, I forgot where OPS again. Yeah, go figure. Let's take some more questions. What platform? I use Thinkorswim. That's through a Charles Schwab. AMD. Didn't we take a look at AMD a while ago? Is that Archer Daniels? Nope, Advanced Micro Division. All right. AMD. Advanced Micro Divisions. 150, 150, the 152s. Check that out. The 152s are going for 272. Cool. So the numbers work. Let's take a look at the chart. Just because the numbers work doesn't mean it's good to jump into. It just means the numbers work. What does it? Okay. What does the chart tell us? Okay. First thing to look at. Here's the high. Here's the low way over there. Okay. A year ago was the low. Okay. And here we are now, 151. Okay. So let's read those numbers. A year ago, 97.13. Bottomed out the end of October at 92.25. Finished off the year at 138. The last 90 days. 90 days. Okay, the 90-day chart. Okay, 90-day chart. Here's the high. Here's the low. Here it was a year ago, 90 days ago, and here's where it is now. Okay, see that? She goes up, slowly coming down. No big movements. Do you see that? No big movements. Up, down, 1 day up, pull back. 1 day up, pull back. 3 days up, pull back. 1 day 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 up, pull back. Yeah, I don't like that pattern at all. Let's take a look at the last 30 days. All right, the last 30 days. Here's your 30-day high. 30 days ago. Okay, your 30-day bottom. The week before last. Not last week, 2 weeks ago. Okay, right there. Let's take a look at those numbers. 30 days ago, we opened up at 166.71. The very next day was the 30-day high, okay, at 170.95. Okay, from the 170.95, she drops down, pulls back up, drops back down again, pulls back up. Now she's back to the downside. Sorry, but that's a no for me. Next. That's the way I do it. It is that simple. It doesn't take that long. Now, I can breeze through this whole scenario in less than a minute. Okay, just for the fun of it, let's take a look at AFRM, and you'll see how quick. Now, I'm not going to stay a lot. I'm just going to go through the motions and just see how quickly I can do it. Because that's how quickly it should be. Okay, you take a look at a chart. It takes you 2 seconds. 2 seconds. High, low, where was it? Where is it? That's it. High, low, where was it? Where is it? Okay. So there's the low. It's bouncing off that low. 4 days to the downside. Yeah, no. I'll wait to find the bottom, turn around to go back up. It's that simple.
Okay.
So I'm going to do a quick one. I'm not going to really explain everything. I'm just going to show you how quickly I go through it. Because when I say, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trade. The 10-minute trade means it should take you less than 10 minutes a day to take a look at your stocks.
Because the first thing you're going to do on Monday morning is, okay,
First thing Monday morning, you're going to take a look.
oh, Johnson & Johnson, Nordstrom's, Key Bank,
And NED. Okay, those are the 4 stocks I'm looking at today. That's it. It is that simple. Those are the 4 stocks I'm looking at today.
all right, so let's take a look. Okay, Johnson & Johnson, 149.91. The 150 is going for 101. That's a no. Next one, JWN. JWN, 2058. The 2050 is going for 50 cents. Cool, I like that. Okay, year ago, high, low, blah, blah, blah. Last 90 days. Okay, like it. Last 30 days. Okay, 30-day high, 30-day low, bouncing off that, 3 days to the upside. Yeah, no, I don't see it. Sorry. Where was I? Key Bank. Key. K-E-Y. 15 to 15. Nice, I like that. Okay, a year ago, the high, the low. Okay, last 90 days. Okay, high, the low. Where are we now? The last 30 days. Okay, high, low. Where are we going? Trending to the upside. Yeah, it makes me a little uncomfortable. Okay, because it's too close to the high. Back again, NEE. NEE. 73.79. 74, 75. Okay, it gives me 1%. That's a no right off the bat. She's at the 30-day high. Okay. Let's go to my other list. Johnson & Johnson, yep. Key JW, I looked at those. Oh, VLO. VLO. 156, the 150, okay, that works. Nice, okay. The high, the low, year ago, last 90 days, okay, the low, the high, nice. 30 days, the high, the bottom, right here, ooh, great. I wait for one more day to the upside. Update, update, here we are, one more day to the upside, I jump into that one. So I'll look at that one on Tuesday, or Monday morning. See what it does Monday morning. Okay, that's VLO, DFS, DFS, Discover Card, 124. Nope, 25 cents. What, are you kidding me? Really? International Paper, IP. Oops. 38.50 to 39. Ooh, that works. Yeah, that's going to be a no. Yep, sorry.
All right, so I just went through about 8 or 10 stocks. It's actually that quick. Okay, now, most of them that I saw, I'd wait for another day to the upside before I jumped into them. But it just give you an idea how quickly it should be. Emma, we already did Altria. Intel. Ooh, somebody wants to look at Intel. Missed all these questions. I missed all these questions. Sorry, guys. Let's go. NVIDIA's in now. ROL. We looked at ROL once before. Rollins. Really?
ROL?
Hey, dude, honestly, it's a monthly. I don't do monthlies. Monthlies just don't pay. Okay? A monthly optionable stock means I can make a covered call on it once a month. That means 12 checks a year. Okay? I like weekly. That's 52 checks a year. All right, so that rolling is a no. Rollings. No, you are wrong. We don't control the market. Institutional investors do. Okay, when I say we, the buyers and sellers, an institutional investor is still a buyer or a seller. Okay? Nvidia is a no. Sorry, butters. Wait, you're buying and selling constantly and generating short-term capital gains. Yeah, Kristen. Okay, 50% per year. Now, if 50% per year scares you because of taxes, you need to talk to another tax strategist or tax planner so that you don't have to pay taxes. Okay, so if, and I'm not quite sure many of you people know this, okay, on your W-2 form where you decide how much taxes you want taken out, line 7A. That's all I'm going to say, line 7A. Read it, see what it says. Line 7A. All right, do you ever catch a good lead from chat? Simple man. All right, let me show you something here, simple man. Well, he's a simple man. All right, see this right here? This is last week. Okay, these are all the stocks you people have me take a look at. All right, now, you see up over here, circled? 1, 2, 3, 4, 5, 6, 7, 8. That's it. Out of all of these, only 8 of them were worthwhile. Okay? Now, out of those 8, that was on my list, that's 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 on my list. Every single one on my personal list. Every single one. Okay, this is last week. This is this week. Okay? How many do I have circled? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14. Oh, cool. But out of all of these, those 14. So, I don't know. All of those are on my list also. Okay. Yeah. Very rarely. Now, I've been doing this since January, the live show since January. Since January, okay? Now, I have a list like this for every single week. All right? This is how many you guys have me take a look at. Now, since the beginning of January, only 2 made that weren't on my list before. Okay? Only 2. Okay, so basically everything you guys tell me, I already know the good ones. So to answer your question, do I ever catch a good one on this chat? No. 2. No. How many? Okay, the first quarter was 90 days. Second quarter, we're in the second month of the second quarter. Second week of the second month of the second quarter. So we're halfway through the second quarter. Okay? MPW. All right, Ross, let's take a look at MPW. MPW. All right. $4.80. Now, just to let you know, I do have some MPW. Okay, we found this last week or the week before. Anyway, MPW 480. The $5 is going for 8 cents. Now, 8 cents doesn't sound like a lot, but the purchase price is 480. Okay, so 8 cents is more than 1%. It sounds odd, but it is more than 1%. Now, let's take a look at the chart, because the chart was pretty cool. First thing I want to see on the 1-year chart, where's the high? Where's the low? Where was it a year ago, and where is it now? Okay? All right, so let's go take a look at the numbers. A year ago, $8.38. Topped off the year at $10.76. Dropped down to the bottom at $2.92. The last 90 days. Check it out. The high, the low, where was it? Where is it? First thing I want to see. Now I want to look at patterns. Look at these patterns. Up, down, up, down, up, down, up, down, up, down. Nice. I like the pattern. It's consistent. There's consistency to this pattern. It doesn't take long to figure it out. All right, so last 30 days. Okay? 30-day bottom, 30-day high. Drop down, up, down, up, down, up, down, up. Here's where we are now. But look where the 30-day high is, way up here. Still got a lot of space to go. Okay, the bottom, the new 30-day bottom, well, that's still over there. But those are going to drop off pretty soon, and this will become the new 30-day bottom right here. Okay, it's not that high, but this height is here. So yeah, it's still worth jumping into, in my humble opinion, but I already own it, so that's kind of pointless. Okay, what we haven't done, take a look at seasonality. Let's see what this thing normally does this time of year. Just sideways. The red line represents this year, last 10 years. The blue line represents this year. Not much. Waste management, huh, Oliver? Sage, could you please help me create a buying plan in the evening for individuals who are working? Sage, that's an awesome idea. Tell you what, send me a DM. I'll give you a buzz. We can chat about it. Come up with an idea. Okay. What are we looking at now? Okay, what are we looking at now? Sage, if you're up for that, I'm more than glad to help you out. LVS. Elvis is in the building. That's Southwest Airlines, LVS. LVS. First thing I want to see, 46.54, the 46.50s, 63 cents. Come on, you guys all should know by now, that's over 1%. It is, it's over 1%. So let's take a look at the chart, see what it looks like. Now, just to let you know, I did buy LVS earlier this year, okay? Ooh, I kind of like it, looking like it. Okay. Oh, no, wait, this is not Southwest Airlines. This is Las Vegas Sands. Okay, I was wrong. Las Vegas Sands. So, monthly chart, I'm confused. Hyper high 777. You're confused. I don't know what you're confused about. This is the 1-year chart. Okay? I look at the 1-year chart, 90-day chart, 30-day chart, and then the seasonality. All right? First thing I want to look at, the 1-year chart. Where's the high of the year? Where is the low of the year? Okay? Where was it a year ago, and where is it now? Those are the 4 things I want to look at in every single chart. The high, the low, where was it, where is it? That's the 1 year. Now let's go to the 90-day chart. Okay? This is the last 90 days, or the last 3 months. Okay? The high, the low, where was it, where is it? Okay? Look for patterns. Look, it goes up, down, up, down, up, down, up, down, 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 up. Okay? Look at the pattern. Okay? Kind of consistency. Now I want to go to the 30-day chart. The 30-day chart gives me an idea of where I think it's going to go in the next 4 or 5 days. Why? Well, if I'm buying it on Monday and I want to be out on Friday, I want to have some kind of idea where it's going to be going. Okay, does that make sense? Okay, so 30 days ago was the 30-day high. Okay, you only won. Hey, thank you for that. There's only one 30-day high, and there's only one 30-day bottom. Okay, so from the high, it dropped down to the 30-day bottom. Now it's bouncing up off of that, going sideways a little bit. So where's it going to go now? Personally, it could continue to go up. Okay, there's no exact science to it. It's just logic. 30 days ago is your high. Here's your bottom. It's going up. So where do we think it's going to go? I would prefer it to stay right where it is or go higher. Okay, but it always comes back to that first question. Okay? Never buy something you do not understand and you do not want to hold long term. Do you know who Las Vegas Sands Hotel is? Do you want to own it? That's the question. And do you want to own it long term? Those are the questions you need to ask yourself before you buy anything. Do I understand it? Do I want to own it? Hey, thanks for that. Very nice of you. It's a very simple question. Do I understand it? Do I want to own it? Never sell at a loss. Make sure it has increasing dividends. Make sure it has weekly options because you can get a weekly cash flow. And then make sure the numbers work. Well, we already checked the numbers. Let's see the exact number. So if I'm buying it at 46.54, I'm selling the 46.50. I'm collecting 63 cents. So where's 63? Okay, 63. Okay, I'm losing 4 cents right off the top, so I want to subtract 4 cents right off of that. So my profit's going to be 59. I'm going to divide that by the 46.50. Okay, I'm getting 1.3%. Is that right? Yeah, 1.3%. How can you go wrong? 1.3%. And that's for the week. Okay, that's Sands Hotel in Las Vegas. Okay, they've been around. I think Elvis even may have stayed there. I don't know. Okay, hyper high. You're gonna have to explain a little bit more. Casual at SMG. Why are the only options retirement? I'm not quite sure what you mean by that, Kappas. Why are the only option retirement? I have no idea what that means. But let's look at SMG. Isn't that Smucker's? SMG? SMG. Scott's Miracle-Gro. Really? That's a monthly, dude. Sorry. SMG is a monthly. I don't do monthlies. They just don't pay. Please look at NVIDIA. Really? Seriously, you want me to look at NVIDIA? NVDA. Alright. I got a bunch of things that are wrong with NVIDIA. Number one, a year ago it was at 200 bucks. Now it's at $900. Okay, I don't do anything over 250 bucks. As rich as you think I am, I ain't. I cannot do 1,000 shares of NVIDIA. I can't. Okay? Number two. Alright, you ready for this? Okay, here's your dividend over here. Are you reading that right? You're paying $900 a share. I'm going to say it really slow so you guys can understand this. $900 a share. And the dividend that they're giving you, 4 cents. You explain that to me in a manner which I will understand. I didn't go to college, but I ain't that stupid. $900 a share and they're giving you 4 cents? Yeah, no. Sorry. All my client owns those. Okay, Bristol Myers Squibb, Vodafone, Johnson & Johnson, and Pfizer. What's wrong with those? Colin. Okay, I have no problem with all. Maybe Vodafone. I'm not quite sure if Vodafone actually is in my repertoire. VOD. Alright, Vodafone. $8.73, $8.50 is going for 31. Nine's going for that. Nice. I like the premiums. That looks nice. Okay, let's look at historical data. Dividends. Okay, they've been paying dividends since 1989. Okay, not bad.
Let's take a look at some of them. 1, 3, 5, 4, 8, 5, 6, 5, 2, 3, 7, 12, 15, 12, 13, 14, 12, 41, 46, 52, 101, 39, 8. There's no consistency here whatsoever. 114, 103, 53. There's no consistency whatsoever.
None. No consistency whatsoever. Now, Pfizer, Johnson & Johnson, Bristol Myers Squibb, yeah, I go for those. Vodafone, no. There's no consistency in the increases of the dividends. Just like all over the place. What would be the point?
Okay, well, let's take a look at the chart. Okay,
1 year chart, a year ago, here she is, way over there. The high of the year, a year ago. The low, back in February.
and right now she's at 870. Okay, the last 90 days. Okay,
Last 90 days. The high, beginning of March. The low, in the beginning of February. She was up, down, up, down, up, down, up, down, up, down, up.
okay. Now last 30 days.
Okay, 30-day high, 30-day low. Okay, she came down, up, down, up, down, up, down, up. Where do you think it's going to go next? Really not that difficult to figure it out. Your 30-day high's here, and you're right here. Okay, could it go and challenge the 30-day high? Yeah, it could. But that's not a game I want to play. Your 30-day bottom's way over here. Here's your 30-day bottom, and you're way up here. Yeah, I'm going to say no to Vodafone. Sorry. Yeah, we're almost done for the night. Sage, could you please create a buying plan in the evening for individuals who are working? Yeah, I could. Didn't we already have this conversation? Okay. Sage, just send me a DM. Okay, with your number. I'll give you a call. And you can walk me through what you have in mind. PLTR, we already looked at that one tonight. How many percentage do you usually gain on weekly trade? Conservative.
Good question. Let's go take a gander at it. Now, for those of you that are new here and you didn't know, I actually post all my trades every week. Okay?
For you doubters, because there's doubters out there, the haters, if you're not working hard enough, wait a minute, if you don't have a lot of haters, you're not working hard enough. So I think we had 4 last night, 6 the night before. I find it funny. All right, now, I tell you, I have 6 different trading accounts. 6. I share 2 of them publicly. That's it. I'm a nice guy, but I'm not that nice. All right, so account number 1, all cash. Account number 2, margin. Huge difference between a margin account and a cash account. The reason why I did 2, to show you what the difference is. Now, it's very challenging to see the differences because we've been in a very good market lately for this year. Okay, week number 1, 2.12%, 2.38. Week number 2, 1.3, 2.5. Week number 3, 0.85, 1.43. Week number 4, 0.9, 2.97. Week number 5, 1.03, 2.09, 1.06, 3.02, so on and so forth. They're all there. I haven't posted my trades for this week yet because options expire on Saturday, so I haven't done all my math yet. But they're all listed there
if you want to take a look. That's just this year.
Okay, now I've been doing this for quite a while, so I have numbers like that going back a long time. More questions. Show us your screen, not your back. Oh, the screen. Yeah, well, you know what? I'm just terribly sorry, dude. Okay, but who said that? Charming resources, yeah. Okay, I just set this program up. This is my son's house. Okay, so I'm down here inconveniencing my children. You know, it's either that, staying in a hotel, staying in a boat, one of those. I just prefer to say hanging out with my kids. Because I like my kids. They're fun. They like having me around. So it is what it is. So I'm sorry about turning my back on you, but if there's a way, I probably could put the computer right here. Yeah, I think I'll try that tomorrow. It's good advice. So I'll set the computer up here and I'll have the screen behind me. That's what I usually do at home. Now, like I said, I'm visiting my son. So when I go back home in New England, I have the computer in front of me and I have the screen behind me. But here I'm at my son's house, so this is his setup. Yeah, so I'll move the computer tomorrow, make it easier for you guys. All right, so where was I? Oh, more questions. Champ, what's wrong with style? Type of style for the strategy to use to train good and stuff. Okay, thank you for that, champ. Virtual upset per week. Okay, we'll missing questions. TDA. All right, we already looked at VOD, Yogi. Which stock did you mention? Yep. Thank you, okay. Apple, we look at Apple, of course, below. Right, you can't even figure out how to reverse cameras, but you want to give advice on investment. Broken ski bum. All right, this is for you, broken ski bum. You ready? All right, there you go. Happy? Now, I'm satisfying you. However, it aggravates the hell out of me. Why? I got 5 cameras going. 1, 2, 3, 4, 5. Only one of them is confusing the hell out of me, and I ain't doing this for your enjoyment. All right? I like all the cameras to be the exact same. That way I'm moving all the same. Okay? That camera doesn't allow me to reverse. That camera doesn't allow me to reverse. That one doesn't. Only this one does. Am I doing it for you? No, I'm not doing it for you. I'm doing it for myself. If you want to see the screen is live on YouTube. Get off your ass. Go to your phone or your computer. No, get off your phone. Go to your computer or your television. Put it on YouTube. You'll see the screen. Left to right, high to low. It's not reversed. It's just reversed for you on your phone or your tablet. Okay? Walmart. Let's take a look at Walmart. Why not stack HCHD instead of individuals? Kyle, really? I just showed you VO a little while ago. Now you want me to pick on SCHD? Well, let's do it. SCHD. Number 1, SCHD is a monthly. That means I can only get 12 checks a year. 12. That's it. I do it once a month. And then I have to figure out where the hell is it going to be in 30 days. It's hard enough to figure out where it's going to be in 5 days. If I buy it on Monday, where's it going to be on Friday? That's 5 days. You want me to buy it on a Monday and figure out where it's going to be 30 days from now? Oh, hell no. Let's take a look at another reason why I don't like SCHD. SCHD. Okay, you ready? SCHD. Here's the numbers from Yahoo Finance. Okay, 79 bucks. It is returning me a yield of 3.4%. Now, I invest for safe, secure, predictable 1% per week. You want to put your money in SCHD, and they're offering you 3.4% for the year. For the year, 3.4% for the year, or 1% per week, which is 50% per year. Okay, I didn't go to college, but I do know 50% is better than what? Than 3.47. Okay? I never claimed to be a mathematician, but I do know 50% is better than 3.4%. Why would I give my money to a computer? Because SCHD's electronically traded fund, freaking computer does it for you. Because you're too lazy to do it yourself. Take responsibility for your own money, for your own investments. Do it yourself. Let's see what is in CHD. For that, we come over to here, to the holdings. What is in CHD? SCHD. Oh, look at this.
Texas Instruments, Chevron, Lockheed Martin, Pepsi, Coca-Cola, UPS, Verizon, Amgen, Cisco, Pfizer.
Those are just the top holdings. You can individually buy these yourself, do covered calls every week on any one of those and get more than 3.4%. So why don't you? Why would you put your money into a computer-based trading system that gives you 3.4%? Seriously? Anyway, let's go look at something else. Please look at Manu. You won't regret analyzing Manu, the best stock in the world. Oh my God, I love it when people say that one. Manu, M-A-N-U. M-A-N-U. Well, number one, they don't have a dividend. Okay? The name of this channel is Dividend Investing for Weekly Cash Flow. Manu doesn't have dividends. Why would I bother with it? Seriously. Okay? Safe, predictable, consistent 1% per week using nothing but pre-qualified dividend stocks. Companies that have increased their dividends consistently for 20 years or more. Manu doesn't even have dividends. Why would I invest in it? $15 is 16. Okay. If I can buy it Monday morning at $16.11, sell it to someone for zero. It doesn't make no sense whatsoever. Sorry, it just doesn't make any sense. Doesn't have dividends. The option premium is horrible. Okay, the only thing going for it is bouncing off of the low, and possibly might move up. That's the only thing I can see on it. But I'm not looking for capital appreciation. I'm looking for a safe, predictable, consistent 1% per week. Safe, consistent, predictable. There's no predictability to a company that does not pay dividends. If the stock goes down, what am I getting? Nothing. Okay, well, matter of fact, look at the high of the year, 2680. Where is it now? 1577. How can you possibly say that's a great stock? It may be for you, but that's not what I'm looking for. S-O-U-N, that's always been a no. S-O-U-N. $5.09. S-O-U-N. No dividends. Why would I buy a stock in a dividend investing for weekly cash flow program if the company doesn't have dividends? Okay, once or twice a week, somebody goes, well, look at SoundHound. They're awesome. They don't pay dividends. Why would I look at it? Do you actually trade on Think or Swim, or do you just use it for charting? I have 6 different accounts. Okay, I have 4 of them with Think or Swim, and I have 2 of them elsewhere. MDT, Medtronics. What is this app? This app is Think or Swim with Charles Schwab. Medtronics, MDT, MDT. All right, I can buy it at 84. The 84 is going for 26 cents. Sorry, dude. Not 1%. Okay, now I've shown you over 20 to 30 stocks tonight, and I know for a fact over half a dozen of ones that do work. It's very delayed in chat. Sorry, that's why some people are in trouble. Positive comments thinking you missed it. Yeah, well, I don't read that fast. It's all backwards. No, it's not backwards. Brody bar stress. No, I'm not. I can't read the screen. Okay, Florida Mikey. This screen is live on YouTube. Okay, YouTube.10minutetrade.com. It's live there. You can actually see the numbers. You can't see the numbers on your phone or your iPad. They're too freaking small. That's why this is live on YouTube. Go sit in front of your TV, big screen TV. Pop it up there. You see the numbers. you should focus on institutional order flow. Okay, Georgie, I like it when people tell me what to do. Do you think Webull is a decent platform to trade on? I never tried Webull. I mean, I tried Robinhood. I like Robinhood. It's simple, it's easy, and I do different trading strategies on Robinhood. Do you have the available list of your 300 stocks? Yes, James, I do. I make that available to my trading group. What about Forex? Yeah, I don't sit in front of my computer. Okay, I do this 10 minutes a day. Oh, Home Depot is a no. PAG, maybe. The reason Home Depot is a no is the premiums are. Don't get me wrong, Home Depot is a 100-year-old company. 100 years old. They're dividend king. They increase their dividends consistently every single year. However, the premiums are less than 1%. Okay, there's too many other companies that offer better premiums. So, where would you go? A company that offers you a 0.5%, or a company that offers you 1%. Now, 1% a year, 1% a week is 50% per year. A 0.5% per week is 26% per year. It all depends on what you want to do. Now, if you like Home Depot, fine, buy Home Depot. Let's take a quick look at it. Okay, 346, 350s, 347s. Look at that, $7. That's 2%. Okay, nice. Well, let's take a look at it, because it actually is over 1%. Let's find out exactly what it is. Okay, so the 347s, right here, 347.50s are going for $7 a share. $7, and we're paying 346.28 divided by 346.28. That comes to 2%. I mean, that's a 2% trade. That's just the numbers. Now we need to look at the charts. So let's see what the charts look like. Okay, first thing I want to see, the high of the year, the low of the year. Where was it a year ago? Where is it now? Okay, fine. I like that. Let's dive in a little bit deeper. Okay, the last 90 days. It's the last 3 months. The high, the low. Where was it? Where is it? Okay, fine. That looks good too. The last 30 days. Okay. The high, the low. Where was it? Where is it? Okay, the 30-day high's over here. Your 30-day bottom's over here. She jumps up, pulls back up, pulls back. She's going up. That is plain to see. Okay? 30-day high, pulls back. Here's your new bottom. Okay, comes up, topped out, pulled back, topped out, pulled back, topped out, pulled back, topped out. Okay, could be going down. Yeah, could be. I would make some money. See what it does. Okay, PAQ. 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 Alright. That usually means it's nothing. Alrighty. So what do we have next? Capital appreciation. Leon, look at capital appreciation. You're in the wrong place. Sorry. Good night, Bubba. How do we research it on YouTube? Oh, well. What's your name? Warriors? Remember that movie? The Warriors come out to play. Anyway, top left corner of your screen, you'll see my little pretty face there. It says Dividend Stock Talk. You click on that, that'll take you to the bio. The bio will give you the link, the 10-minute trader. Okay, the 10-minute trader, where are we? Alright, the 10-minute trader, there you have it, right there. You slide on down halfway through. Social media, YouTube, Twitter, Facebook, Instagram, podcast, LinkedIn, Patreon, TikTok, and Books by James. All right there. Come over to YouTube, click on that. That will bring you to the 10-minute trader on YouTube. Same thing. Look, 2 live streams right there. 2 live streams. I'm live on 2 streams at the moment.
Once on the computer screen.
Okay, this computer screen is one. Just this alone. And the other one looks pretty much like what you're looking at. Okay, me standing in front of the computer screen. MPC, Fishing Bob. How you doing? You back again? Fishing Bob, I noticed you've been back every once in a while. What was that again? MPC.
Oh, what is MPC? Marathon. Marathon Peak. Marathon Peak Corporation.
180, 180's going for, yeah, that's not 1%, dude. Sorry. Sorry, it doesn't make 1%. But if you like it, fine.
Okay.
Okay, the bottom, okay, is the high of the year. Here goes the bottom. She's going up, pulled back. Here's where she is now. Pulling off the high of the year.
Don't know what to tell you on that one.
Alright, what else are we looking at? What time is it? Oh my god, it's past 11:30. I'm usually done this time of night. Mikey trades. Just buy options on blue chips for 2 years out. Way more profitable. Okay. Mikey, the only problem I see with that, okay, an option 2 years out. What do I do for income this week? What do I do for income next week while I'm waiting for the 2-year options to actually come into fruition? So that's my question to you, Mikey. Where do I get my money to pay my bills if I take all my money invested for options 2 years out? I'll wait. Pag really, the Pag ups and no. Warriors, yeah, it's funny. Why do dividends matter to you if you only do weekly trades? Why do dividends? Well, here's my idea. Okay, let's say I buy a company. Idea. Let's say I buy it at $200. Then, lo and behold, got some bad news and it drops to 100. I just lost on paper 50% of my money. Now, I'm not gonna write options on it because you can't, because it's too far out. But they increase their dividends every single year, which means I will be getting a higher and higher dividend every 90 days. Okay? Every year they increase their dividends to the shareholders. So if I'm stuck holding a stock for longer than I want to hold it for, I'm getting higher dividends every year. That's why I like dividend stocks. Okay? And a company that's increased their dividends for 25 years or more has some historical performance behind them. If you can make enough money to share profits with your investors consistently, increasing every single year, you must be doing something right. That makes me a little bit more secure with where I put my money. Now, where you do yours, totally up to you. I just tell you what I do with my money. This is what works for me. I don't give advice to anyone. Matter of fact, I tell people, don't listen to a damn word I say. Okay? Do your own research. Marathon, does it make sense to you? Now, I do own Marathon, but I don't own this one. I own MRO, which is the same thing.
Okay. This is Marathon, but it's MPC.
Marathon Peak Corporation.
I own MRO. MRO. Okay.
Marathon Oil Corporation. A little bit different. Okay, 2667. The 2650s are going for 32. The 27s are going for 14. I already own it. And I just take a look at it every week. Toodle Bear. Facts. I appreciate that. I'll say my goodbyes now. See you later, G. Just want enough to purchase my house and land. Hey, John, that sounds interesting, but I have 18,000 to trade. Good for you. That's awesome. Make your decisions wisely. Day trade, no. How do I make money on a weekly and monthly basis? Well, 6 Solutions, 6G, you're new here. Okay, I'm good with names. Really, I am. Names and numbers. Just keep showing up. Keep asking questions. Learn. If it makes sense, figure out what works for you. Okay, if it makes sense to you, that's all. That's all you have to figure out. All right. That being said, what's next? Now is a good time to buy Starbucks. Yeah, I bought some Starbucks on Friday. Just wanted to purchase my house. Yeah, John, I still, even though you purchase a house or land, John, even if you're off grid, you still need some type of cash flow. Because even if you raise your own cattle, raise your own vegetables, raise your own this, you still have certain items you need cash for. You need to turn up the volume a bit on the YouTube channel. Alright, sorry, Austin. I'm turned away from it. Alright, G, catch you later. I have 500 willing to invest for cash flow. What do you recommend to start? I have no experience. Well, my advice, if you have no experience, don't do anything. Learn as much as you possibly can. Okay? Keep putting away little bits at a time. Start out small. And we did MPW the other day. It's $4 stock. Okay? Granted, you're not going to get a whole bunch. It's going to take time to get started. I'm assuming if you only have 500 to get started with, you're on the young side. You waved at Botox Doc. Yes, I did. Okay, well, that works for you. Papa Jeff. Hey, I'm going to bed tonight too. I'm going to bed very shortly. Have a great night. Yep. See you tomorrow. What do you think about Robin? I love Robin. Some things I like about it, some things I don't like about it. Hey, John T, you just need 200 grand. There you go. I'm still learning, but nervous to plunge. I'm new on your page. Thanks for sharing. Okay. Bro, you lost me money. I have no idea what you're talking about, Crispy. Okay? Couple of reasons. One, you're not in my trading group. Okay? You never asked my opinion on anything. Three, I never recommended anything. I never recommend anything. Matter of fact, I tell people to actually do your own research. Rule number one, never buy something you do not understand or you do not want to hold long term. How I lost you money, you must have swayed from what I say, my rules. Never buy something you don't understand or don't want to hold long term. Two, never sell at a loss. Okay, if you lost money, you did something that I don't do. Never buy something you don't understand, don't want to hold long term, never sell at a loss. Three, 20 years or more of increased dividends. Four, weekly options. Five, make sure the numbers work. So, Crispy Christian, you're not in my trading group, so I really have no idea what you did. Okay? Now, for $100 a month, you can ask me any questions you want. I will actually look over your shoulder while you're doing something and explain things to you. I will never tell you what to do. I never tell anyone what to do. I don't give any suggestions whatsoever. So how you possibly think I lost your money? I have no idea what you're talking about. Seriously. Not once have you ever heard me recommend anything. When I say, oh, I like something, that means I like it. You got to figure out your own thing. Does it make sense? Never buy something you don't want to hold long term. I say that at least 5, 6 times every single night. If you don't understand it, you don't want to hold on to it, don't buy it. Two, never sell at a loss. If you lost money, I have no idea how you did it. Okay, all I can say is, you're not part of my trading group, which means I have no idea what you're doing. Yep, you're right. I'm not a financial advisor. I always say that too. What's the trading group? Oh, the trading group every morning, Monday, Tuesday, Wednesday, Thursday, we jump on a Zoom call. Okay, I do a podcast every single day. Okay, I've been doing it for over 4 years. Every single day I do a podcast. I go through all my trades. All the trades you see me post.
Hold on a second. Okay.
All these trades here that I post, correspond with, what do you call it? The podcast. I do a podcast every day.
Now,
The first half of the trade room in the mornings is me doing the podcast, me doing all those trades I just showed you. All right. After I'm done with the podcast, I say, all right, open up for questions, and I'll stay on the phone. I mean, on the Zoom call with my screen open, or we can share your screen. We'll look at your screen, and I will look at your position. I'll actually walk you through. I won't give you advice. I won't tell you. I just give you my opinion. Okay. Well, here's the high. Here's the low. Where do you think it's gonna go? What is logical? Okay. Do you like Marathon Oil Company? Well, they've been in business for almost 100 years. Okay. They've increased their dividends consistently. Consistently. Look at the numbers. I can buy it at 26.67. I can sell some of the rights to buy it from me and get over 1% for the week. Okay. I can't make the decision for you. I can just point things out. You have to decide what's right for you. Because I don't know what your trading strategy. I mean, I don't know what your trading threshold is. I don't know what your risk factors are. I don't know anything. But I can't answer all questions. I have tons of what do you call it, experience making the trades. And that's what people pay for. They pay for me to watch what it is they're doing. I'm not a financial advisor. Thanks, Thomas. Isn't it always easier to blame somebody else, though? Yes, it is. But I don't give anyone any advice. What's your YouTube channel? The 10-Minute Trader. The THE 10-Minute Trader. The 10-Minute Trader. Was Rucko shares a good buy on Friday? All right, Devin, I don't do Rucko. They don't have 20 years of increased dividends. It is very simple. 20 years of increased dividends and weekly options. Those two criteria cut your list down from 9,500 down to 3. Okay, I think we're done with questions. Same name of the podcast. Podcast. Hold on a second. What is that?
no, the podcast is Dividend Stock Talk.
Okay, so you're here on TikTok. Now I do a whole bunch of videos. Hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow for that safe, secure, predictable 1% a week, and take you along for the ride. That's why I introduce almost every single one of my podcasts. Dividend Stock Talk, brought to you by the 10-Minute Trader. The Dividend Stock Talk's only 4 years old. All right, that 10-Minute Trader is about almost 20 years old. Okay, so if you look at my name, you look at my bio, you see I've been online for a very long time, doing the exact same thing. What are the indicators you trust in advice? Hey, how come the only indicator I use?
Very simple. And please, don't confuse them with anything else.
Okay, my indicators, you ready? 20 years of increased dividends, weekly options, and a dividend calendar. That's it. Every single stock here, all these little green dots represent a company that's increased their dividends for more than 20 years. Okay, we're coming into the 511. That's 23. Let's go to 24. Okay. So, we're here on Saturday, the 11th. Okay, week 13, 14, 15, 16, 17. These are the companies that have their dividend dates this week. Kroger, Kroger, Target, ExxonMobil, Archer Daniels, British Petroleum, RTX Corporation, Chevron, Starbucks, Emerson Electric, Visa, Hershey's, and Whirlpool. That's this week. Next week you have Johnson & Johnson, Walgreens, Aflac, KeyBank. That's just one list. I got like 8 lists. Okay? That's my criteria. 20 years of increased dividends, weekly options, and a calendar. That's the only ones I use. Then of course I can check the charts to make sure the numbers work. Awesome! Thank you. Okay. power is low. Expect yield max. Yeah, no, sorry. How do I find 20-year dividend yield and 20-year option yield? All right, you're asking the wrong question, Kevin. Okay, it's 20 years of increased dividends and weekly options. Okay, so for the dividends, Dividend Kings, 54 companies that have increased their dividends for 50 years or more. That's 5 decades. Okay? Dividend Aristocrats, I think it's 56 or no, 67 companies that have increased their dividends for 25 years or more. Dividend Champions, 150 companies that have increased their dividends for 25 years or more. Dividend Contenders, 300 companies that have increased their dividends for 10 years to 24 years. Consistently increased every single year. There you have it. It is late, so I'm going to count out for the night. You guys have a great night, and I'll see you again.